Hello, guys. How we doing today? Been a rough one, Wolfie. Been a rough one, but ended up doing okay at the end. All right. Wasn't the best trading day for me. I missed the one good opportunity that I should have taken, and then just ended up scalping for the rest of the day. Managed to get in profit, and then just gave it back. So, not the best day as a trader for me. But you live, you learn, you journal, right? And just in general, I felt pretty off today, just pretty tired, which I think can reflect in my trading. I just should not have traded today, but I did not want to miss NFP opportunities, no matter the case, right? Which we'll look at tonight. And current market conditions are really, for lack of a better word, fucked up, right? It's something that I personally, with very little experience, right? I'm only a year and a half in, have never seen before. So it's pretty weird to see firsthand. First of all, guys, you already know how it is. Friday nights, we're in here. A small audience as always. So just wanted to say thank you guys for coming. And it's awesome to see you guys in here. Try harding. No matter the day, no matter the time, right? Yeah, Wolfie, that's a big thing. That's a big thing. Thanks, Jen. But just those days where here, you can look at my screen right now, right? And just imagine this is your equity curve. So you end up and you start with let's just say you start with a loss, all right? So you're already starting with a small loss, which usually, at least for myself, doesn't mean much. Then you get a decent size win, which take recovers your loss and then covers your win. Just imagine that this is your break-even point, all right? Right here. And then what you do is you want to keep trading because this is not a big win. This is a small win, relatively, right? If we look at the numbers here, then that's a huge fucking win. But let's just say we just use this and we would use this, for example, to measure it, right? So you'd say, oh, well, this is not a big enough win for me to say, okay, I'm done for the day. So then you do this. And then maybe you have a tiny ass win slash a break even, and then you do this. And then you go back up. And then you go back up, but then you end up going down. And then within this curve, at what point should you have stopped? Sorry, I don't know if you guys heard, but I got a text. Sorry about that. All right. So, at which point in your equity curve, in this equity curve, right? This is your PNL. Should you have stopped? Well, anyone is going to tell you here. The truth is, following my rules, it's here. Yes. All right. So you're basically following what I mean. Because if you end on that win every single day, you're going to miss out on all the days where your second trade is also a win. And even if we say that it's a smaller win, then you end up with even more profits, right? You're actually right here. And based on my specific model, right, I always look for another one. Why not, right? Because if I'm out of this one and I'm looking, for example, for PM reversal, then I want to trade that reversal. It's a completely different move. It's not, oh, I mismanaged this trade, right? Which sometimes, by the way, if I mismanage this first trade, I'm not trading after because it means that I should already still be in the trade. But if you always end there, you're never going to see that. So I always allow myself for one more. But after a loss, a win, and then closing back into a loss, I already know that this is coming. Like I already know, written in the Bible. All right. You're always going to get chopped up when you get chopped up. And then maybe at some point in your equity curve, where let's just say we continue it for a while, you had that fucking home run. Okay, here's the thing. I don't want to go through this. And especially talking on prop firms, right? You can't go through this. Let's just imagine this is a 5% drawdown. Well, we're pretty much there, right? I can't go through this. Even if I know that the next one's a win, I can't go through it with it because I don't have the drawdown to go there. And at least I'm talking for myself here. If I live through this, there ain't no fucking way in the world that I did not tilt all my money away before the good setup, right? At least that's just me. So what I've noticed is, for me, stopping here is better because one possibility is you get chopped up, but the other one is that you're gonna get a win here. And it's not the best example because I have a max amount of 3 trade ideas per day before trades. So pretty much 3 different trading ideas, but if I get stopped out on SMT, I'm allowed to re-enter once without it counting, if I can say it like that. Those are my specific rules, and don't just take them if you're not trading my model, right? Because it's based on data from my model. Just a quick little drawing. As you can see, my drawing skills are very good. Just to showcase that, yes, sometimes it's just easier to get the fuck out in a small loss or get the fuck out in a small win than to live through chop to just end up the day pretty much break even, right? Exactly, Jan. Power of data. Power of data. I had a student tell me today how happy he was. He was like, "Oh yeah, see August open low, and now we can see higher prices like you wanted." But our fucking open low, sorry for my words, is 6.75% in 2 days. All right. And we're just talking about data, right? And if we talk about further data and we look since July 11th, we'll see that we are currently down 12.38%, right? Which, if we look at how much time it took us to do that same move to the upside, it took us 41 days. And if we look to the move to the downside, it took us 22 days. All right. Don't look for no fucking enigma type stuff here. I'm just saying we went down quicker than we went up. All right. What does that tell you? Well, very, very bearish at the moment. It's stuff that hasn't been seen in a long time. If we look at our most recent very aggressive downside, right, we looked at an 8% down, and that was big. And then we look at that was last summer, we seen a 12% drop, right? So that's where we are. We saw 2,000 handles, and here we're seeing, I believe we're like 2.3, a little bit more than that, 2.6. So this is okay, right? If you're comparing, we could still see upside. I just want to tell you guys, for those that abandoned life and saw this and said, all right, I'm done with NASDAQ, no more. I wanted to say that. But one thing that I mistook in my weekly outlook that I should have been available for, pretty much I should have seen, is the thing that I remind you guys every single time. IPDA data ranges with SMT creates high probability long-term objectives. So if I just plot this out and show you guys, right, and I'm looking at daily SMT, where else do you see daily SMT? Well, there was here already taken out on both assets, so I don't look at that SMT. Oh, I see it right here as well. High probability objective before causing a retracement, and then price went to the next objective, next high probability objective. If you look, that actually formed the low of the day, and we had some sort of TGIF retracement, which did not go far, right? We retraced to the upside just into the close. But clearly, our objective was lower, IPDA 40 range lows. Again, I don't want to speak on if we're going to continue lower or not, because this is a price action review, but we'll have plenty of opportunities to look at that on Sunday. Now, with these incredibly aggressive downwards move, how can you find high probability objectives within, right? I'm not going to go on a 4-hour chart, just like I'm not going to go on a daily, because we didn't have retracements. Like, legit, we just didn't. Why? Because our job was to expand lower very aggressively. So you're not going to be able to get any sort of higher time frame point of interest as an area to look for trades, right? Sometimes I go down to the intra week and I look for 1-hour inverse fair value gaps, like here, for example. You'll see that on Thursday we utilized that. But even then, where were we, right? At open, we already started expanding. This is our 9 a.m. candle. So at that point, what am I looking at if I'm looking at a 1-hour chart? Well, let me zoom in for a sec here. First off, I'm always looking at SMT, right? So I'm looking at this. I see that on NASDAQ, we did not take this swing point, and on ES, we did. So what does that form? Well, we have SMT. That I'm looking at this specifically because it was before the open. Don't worry, we'll go look at it on a lower time frame in just a second. Just making sure I'm not bullshitting. 18762.25, 18761.5. So no, it did not take it. They seem pretty close. I just wanted to make sure. Also, if you look specifically at the 9 a.m. candle, right? Because we had NFP at 8:30, so within this candle. And now the 9 a.m. candle, which you would often see retraced into your NFP gap and then just continue, right? NFP runs on side a lot of the times. Well, we retraced into our premium array. What is our range at this specific moment? Well, I'll look to my most recent swing high that has not yet been broken, to my most recent swing low. This is the range we're currently trading at. This is my premium order block, premium array. We also rebalance the fair value gap we're currently creating. But I do want to just plot these out so that once we go down to a 15-minute chart, you can see that the order flow was justified, right? This is our hourly order block, and we'll just point it out. So the order flow was justifiable. It was technically a clean retracement into expansion. But what no one tells you and no one talks about is the fact that, well, first, you guys know me, you've seen a lot of this. When do I use 1 hour charts to find setups? Never. I don't use 1 hour as a higher time frame chart because to me, it is not a higher time frame chart. It doesn't get into that category where I want to use a 1 hour fair value gap as a point of interest. So in specific conditions, you do have to adjust, but I just wanted to point out that if you did not trade anything today, you missed everything, you can't be mad at that. Like, it's okay to miss on days like these. But we are explaining order flow, 15-minute. If we look at 1 hour order block, if we look at our 15-minute NFP fair value gap, which we understand will be of higher importance than any other, we traded back into it, expanding lower. Then what did we do? Well, we formed a huge range with the morning expansion, right? This is a 10 a.m. 15-minute candle. As you can see, our objective, daily, our relative equal lows are here. I'll plot it out. High probability IPDA objective. All right. And let me just make it a little bit smaller. There we go. So that was our objective, created low of day. But then we had a huge range, and where were we going to retrace to? Well, we were going to retrace to our premium array. Now, I would frame it as I'd want to see it trade all the way back to that last order block candle. But the truth is, the whole order block is this, right? So all we did is expand, do our move, and then retraced into our range. So today, if you were going to ask me what were the opportunities, I'm not going to talk to you about any long opportunities because all we did was expand lower and then retrace into our range. I just wanted to plot out the mean threshold of this gap to show you guys all of this order block, show you guys all we really did is traded into it and we're respecting it. So this is not bullish. This is just us retracing into a close. We're going to dive lower now. Here, I'll leave actually that mean threshold up to show you guys how we utilize this level, right? We just keep tapping into it. And of course, you're looking at the bodies on a 1 minute chart. We're closing through, expanding away. What is this? Consolidation, right? So where were our opportunities? Well, as we said, we framed it on the pullback line. NFP formed. This is our 15-minute fair value gap, right? So let me just plot it as such. 15-minute fair value gap. We already have I was going to say we already have NFP. We already have SMT at this specific level, right? As we framed, which we were looking at the hourly chart, right? Or the 4-hour chart, I believe. 4 a.m. high, SMT. What does that tell? Well, SMT at a key point in time tells you that this has a high probability of being the high of day. All right, so already there, what am I looking for? Well, NFP often runs on side with its fair value gap. So I'm going to look at the gap that it formed, more specifically the 15, because that's what I like to utilize, and look for it to respect that gap and move lower. But I'm still waiting till 9:30 before I look for a trade, right? If you shorted some point here, let me just look for a unicorn. There was one specifically at 9:32 where you could have shorted based on this breaker block because you swept those highs. There should be local SMT here at some point, possibly. Yes, so right here, there's SMT between these swing points and these swing points right here, the same swing points. So technically, you do have a high probability setup entering on this inverse fair value gap, specifically at 932. Now your stop would be here. So technically, you made it to your low-hanging fruit objective, right? Clearly, if we look at it. I'm still going to showcase it, even if, as I explained, it was counter my idea. So am I ever going to look for a short before my manipulation? No, right? There's consolidation, there's equal highs at these levels, but was it a high probability mechanical setup? Yeah, so let's just look at it quickly. High low of day stats in the future during the mentorship. You'll see it. You'll see it. You'll see it. I would look from this point. This was my range, right? Always 5 minute. This was my objective down here. So even though we have internal range liquidity, I'm not going to refer to this range because this was my low hanging fruit in discount. Order block right here is in discount. So this could have been your low hanging fruit objective. I'll just mark it out as a partial, right? Anytime I'm showcasing these rise setups, I'm always looking at the mechanical approach. Now, there are multiple ways to filter these setups to only get the ones that you like. My easiest way is to filter with bias. So if you were bearish, you would have taken this. Well, you should have taken this based on, of course, this breaker block overlapping with the inverse fair value gap here, right? And if we do look at this move, 5 minute order block offers 1.2 R for partial take profit. So for example, if I'm putting 3 contracts on, I'm still going to take one off here, but I'm not going to take 50% of my position at this level. I'm going to hold for the nearest liquidity, clearly, right? This is our latest expansion range. So you're going to refer to that. And of course, expect it to go target these low resistance lows afterwards. But clearly it did not want to. So that would have been 1 to 2 take profits before getting broken even, right? So yes, we don't filter our setups based on result, but clearly that was the nicest resulting trade for sure. Now the real move came after we manipulated, of course, into our 1 hour intra-week array. And as I stated, right, this is not something that I like to utilize. But if you look on the left to ES, it is a much cleaner move on that specific day, right? So ES just retraced into this gap, and I like to utilize PD array quarters, and you can see why pretty much. See how we utilize these quarter levels to understand the price action. Now we expand through it, expand through the next, show disrespect of this, which tells me we're going to respect the next one up top, and then do the same thing, right? Oh, expand through it, respect this one, and then expand through it. Oh, we do not pull back, expand through it. See how we just utilize these setups. I'm not giving you any conclusions. You can come to these, right? ICT talks about it plenty, and a lot of people have taken it for multiple things. I just look at these specific levels whenever I have a large gap, or whenever I'm looking at a higher time frame gap on a lower time frame. So for example, NFB, PPI, all of these gaps, I like to utilize these levels as algorithmic levels, see how price reacts to them. And as you can see right here, if I just remove this for a second, we clearly showed respect of that final quarter, which tells you what, okay, now it should be ready to go down, right? We took out these highs, we rated that liquidity after 930, right? Because what do you expect at 930? A Judah swing. Well, you got a Judah swing lower. So you're going to wait for what? You're going to wait for your manipulation higher because you're looking for lower prices. So we just went to take out this liquidity so we could generate this Judah swing, a real Judas, which was very much more aggressive on NASDAQ. And if we look right here, formed perfectly equal highs. And then what did we do? Well, we took out our highs. We rated. We went up. So now we can go down. We are ready to change from a buy program to a sell program. Hence, that's what we did. A lot of people talk about market structures, blah, 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 all that stuff. Whenever I'm looking for a sign that it's basically aligning with is, of course, I'm always going to use SMT. So I'm always looking at SMT. I'm comparing every swing points. But as you can see right here, we were pretty consistent from this point on, right? Right after these highs were rated, we were pretty consistent. But I knew I had SMT present in close proximity, so that was enough for setup. The big thing I look for is going to be the invalidation of offside arrays. Let me just check your question, Wolfe. Gonna be there in a second. All right, so I just don't want to say it right away. Well, you know what? Why not? So 953. No breaker block. There is no breaker block at this specific time. 952, neither. On ES and on NASDAQ. We can talk more about breakers after this, if you wish. I'll give you a small little insight into breakers. But first of all, just to keep going about what I was talking about, right? Whenever I look for confirmation that, okay, we are about to reverse, I just look at the invalidation of offside arrays, right? So in this case, I want to see bearishness, right? So I'm going to look at our most recent bullish fair value gaps, and I'm going to look for price to inverse these levels, right? And I don't care if it respects it after or not, right? Which it did on NASDAQ and did not on ES. What I'm looking for is a sign that we have a lower objective. Now that lower objective could be just in the same range we just expanded, right? So we could just be retracing lower. But if I'm looking for setup, I need to have some insight into where price is going, and this is the biggest insight, which a lot of people would call a change in the state of delivery, right? I just like to say it's not because of a change in the state of delivery, it's specifically because, okay, it tells me that we have a lower objective now, which to me was just always simpler to understand. We have our inverse fair value gap. Now, precisely with my model, you did not get a setup. You did not get a rise setup on this specific date. There are some instances further down, but as I always say, if I'm trying to go short here, right, or even here, it's because I didn't get my entry on the top. And that to me is FOMO. So maybe if we look at SMT with YM, right, at these swing points, we could see this become a breaker, but I'm not going to. Why? Because with the conservative approach, I never would. I don't, in my personal trading, look at SMT with YM at all. Whenever I do that, actually, it's when I study. I'm studying some referencing to ADR levels, right? So that's some stuff I do. So you did not have a rise model. Did you have plenty of different models that were present? Yes, of course, and plenty of different ways to trade it. But personally, whenever my unicorn does not form at the key time and price in reference to where we are, of course, then it is not a high probability setup. So technically today should have just been short, close, near open, be happy with your profits, and stop. That should have been my day, right? So as I told you, Wolfe, not the best day for me. Went a little all over the place, but thankfully ended up in a slight profit, which I just got lucky getting out at the right variance, I would say. And if we look forward, we reached our objective without giving ourselves any other opportunities to enter. And I'm looking at everything. Even repos, it did not give any entries. This was already inverted. I'm looking at inverse fair value gaps at this time, but I need a breaker to be present first. Possibly that one. Not even, right? We did not trade back into anything. So specifically with a unicorn setup, nothing was there for me. Maybe if we look in the 5-minute, you'll get 0.5 R with a stop there and a target right here, right? I was pretty on point with that, but that's not what I'm looking for. And once my objective is met, the only thing I can consider is trading a retracement, and being down 13%, and more specifically 6% or almost 7 on the month in 2 days does not give me once too long. So very simple, the day was done for me at this point. And if you look at these moves specifically, we just had search and destroy, right? Just constant expansion. Took out the highs, took out the lows. Now it retook out the highs, retook out the lows. What is that? That's pure search and destroy. Same thing on ES. It actually is a little nicer of a widening pattern, right? If you look, I'll just draw over it. These are not conditions you want to be a part of, because no matter what side you're trading, you're always getting stopped out. You're shorting here, you're getting stopped out here. I drew it a little off. There you go. You're getting stopped out here because you try to short. Okay, well, what if I tried to long? Well, okay, you tried to long. You reach one take profit, and then you got stopped. Like, this is just so back and forth. Constant back and forth. And yes, you're going to take some money out on these trades if you have the perfect entry. But the truth is, most of you are just going to greed and try and go for your real objective, which in this case would have been already met, right? That FVG though, and the IFVG, thank you. Sorry for the interruption. Oh no, you're good, Wolfie. I'll head into breaker blocks with you. But here's the thing. If I really just traded anything I wanted, I would be on my charts. I was going to say 24/7, but the whole duration of New York, including the lunch, and I would just be clicking on buttons and have approximately 20 trades a day. And I can tell you with confidence, a lot of these would be winners. But the truth is, I'll make, for example, 20R on my day. But I can make 12 in 1 or 2 trades. So why would I want to spend my whole day? So I'm basically spending quadruple the time, right? I'm spending 8 hours in front of my chart instead of 2 hours. And I'm only getting 8R more than I would if I just spent that 2 hours. So for me, it's a question of lifestyle. I don't want to spend my life in front of my charts. I don't want to learn that to spend my life in front of my charts. I want to travel, right? So because of that, I am aligning my trading with who and what I want to be and do. And that is not stare at my charts 24/7. So definitely my intent is just to concentrate on the morning session. If I get some opportunities, I get the fuck out. If not, I look for PM trade. But you guys will notice, especially if it's been some times that you've been in here, that I never trade PM session NFP. Why? Because it does this shit 90% of the time, right? What did we do? Well, we rated lunch a few times and then just consolidated into a close, right? It's the close of the weekly candle. What are we going to do? Consolidate, retrace into a close. And yes, a lot of people will come to you and tell you, oh, end of day macro, end of day macro. All right, so 1550, you're going to start looking right there. Okay, cool. I don't care. Right? And yes, there you can say that there was some type of move here, right? You inverse this fair value gap, could have entered at 53, and you basically would hold until 58, because that is well, I'm not going to say that, but you would have held until 58, which if you look is that retracement right here. So 1.41 hour. Is it worth it? Fuck no. Well, at least not to me, right? I'm always sharing my experience here. And there are 20,000 breakers in this area, but 90% of them have SMT. And I always say it, whenever you have SMT at both sides of the range, it is not reversals. It's just consolidating. So you have to stay away until you have a clear raid on that specific consolidation, which you had a raid to the upside. So basically the only true move I could consider is this move down to go target the liquidity, which did not even reach liquidity before a deep retracement and then continuation. So clearly, Friday PM session is not often high probability. And if we talk purely statistics, it is very low probability to have a successful trade with my model during this time. So to me, the only valuable setup, unless you're considering trading during lunch, which is the example I'm going to give you in a second, Wolfe. Actually, no, because we did not form that breaker block there. Unless you're considering trading during lunch, or for you, you're taking trades at 10:30, right? Whenever you have 11:30, sorry, whenever you have consolidation around the 10 a.m. open, right? And this is still around the 10 a.m. open. At 10:30, you're gonna go target one side of the opening range. Let me just find 10:30. 10:30, what did we do? We went lower, target one side of the opening range with SMT, of course, which Nasdaq did not go. And then 11:30 will, because of London close, will stop the consolidation. That's something that Josh has shared with us on our last Friday price action review. So definitely a lot of things you could trade there, but what I'm explaining, or trying to explain at least, is that there is nothing worth trading there. So there's the morning, specifically for my model. There was a tiny short at 932, I believe, or would have been, yes, so 932. Tiny short would have gave you 2R on your first take profit, or if you traded it mechanically, you would have taken one contract, had about 2 or 3R realized, and then got stopped for your last one. So more like 1 or 2R realized. So definitely not the best of days for my model. Still would have turned out profitable just because you didn't have any unicorns anywhere. So it wasn't hard to net trade on that specific day. Do you guys have any questions before I just dive very quickly and give an explanation of Wolfe about breaker blocks? I'm seeing you type. Wolfe, do you have any other questions about anything, right? It's Friday. We're taking it easy. We're just chilling in here, grinding on a Friday night. So I'm open to any questions. You guys spend the time to come on a Friday night at 9 p.m. I will gladly answer your questions. I noticed that these ranges of consolidation are very high in points, right? I assume election year. Okay, so clearly we've seen very volatile markets these past 2 or 3 weeks. How would I explain them? Well, I wouldn't, because I have no understanding on fundamental basics. That is that simple. So I don't know why it's been so volatile, but the truth is it's all proportional. So last year you would have seen the same range and you would have said, okay, yeah, that's about 75 handles. And now you see this range and now it's 250 handles. So it's all proportional no matter the volatility. The only thing that sucks is your risk, right? I've noticed that on my setup, let's just say you shorted this gap, right? You'd put your stop here. You'd, on a regular day, you'd be like, all right, that's like 20, 22 handles. No, that's 62 handles. So you have to be careful with your risk and understand that, hey, my take profit is 136 points away. But again, since we are so volatile, you can see 1 minute candles and you just look at the ranges, right? Of the big 1 minute candles. That's a 60 point candle, 40 point candle, right? So everything is proportional. So even though we see bigger ranges, right? Which, yeah, I would say it would be because of election year. But I have no knowledge of it. It is my first time trading election year, so I couldn't tell you. But just to say that everything is proportional, the only difference is that you do have a less of a big position size. So same risk, but just a smaller position size. And because it's proportional in expansion and in your stops placement, you end up making the same amount of money no matter what. I don't like it either. I am confused as to why. I'd like to understand why that is currently going on. But the truth is, no matter how I feel about it, I can still make money there. So I don't really care, you know? And yes, as I said, you're gonna see a lot of larger stops, but the on-side moves are still proportional, so you still get your opportunity, right? The way that I've adjusted is being happy with less. So for example, I put in the same position size and I use tighter stops, but then I get like 20 points my way and I just take a contract off. And I'm exaggerating with 20 points. I'm more like in the 30, 40s range because I don't even have time to take profit before 20 points now. But I basically look to get money out quickly so that way I can allow my larger risk. That's how I've personally adjusted with the specific conditions. And I'm thinking about this, Wolfe, but if you head over in the Discord, right? If you head over to projects, which I will link you the specific one, I have of course, the rice trading model, standard deviations. All of the links are in there. But if you do go to the standard deviations project, you'll notice that the Notion document is also linked in there alongside the thread. And if you head to the Notion document specifically, you'll see examples of breaker blocks, and you'll actually see the breaker blocks explained as to how I define a breaker block, how I utilize standard deviations of that breaker block. So you basically have a course content just laying there. So if you want it, it's right there. Just instead of me spending time on the charts showing you, I think it will be more valuable and just more refined if you do head there, because I spent a lot more time doing that than I would to show you breakers right now. There should be a few examples in there as well. How does that sound? That's awesome. That's awesome. All right. Well, if you guys have any other questions, now's the time. If not, I'll wish you all a great weekend, right? Don't take it too harshly. I know I've seen a lot of mixed results in the Discord this week. It was a hard week, all right? And yes, it was filled with opportunity. They always are. But it was a hard week to navigate, especially if you were bullish like myself. So don't take it too harsh, right? Take it on the chin. 1 week is a week. Go for the next week, right? Just keep your head up, keep going, don't give up. It's always the same things that we repeat to ourselves, but that's because that's how you move forward, right? Simple. As long as you don't give up, you'll make it work. At least that's my mentality with it. So you guys have a great weekend. It was nice to have you guys here again on a Friday night, and we'll see each other on Sunday for the outlook, all right? Thank you, Wolfie. You too. Have a good one, Jan. You too, Justin, all right? Have a great weekend.